Growth in equities and derivatives, why Latam isn't booming and what global markets can teach us. Leaders Perspective. Los mercados de equities y derivados del mundo viven una era dorada. En 2023, más de 2.000 millones de contratos de derivados fueron operados a nivel global. En América Latina, seguimos esperando el arranque. Growth in Equities and Derivatives no es una mesa más. Es un grito de alerta. ¿Cómo puede una región con tamaño, talento y moneda global como el peso mexicano quedarse fuera del nuevo ciclo de sofisticación financiera? Este panel reúne a reguladores, exchanges, bancos, asset managers y expertos en infraestructura. Discutirán reformas clave, el rol de la educación financiera, el potencial del retail y la urgencia de crear mercados competitivos que ofrezcan coberturas, liquidez y oportunidades. Porque si no se construye la infraestructura, esta generación de inversionistas la buscará en otra parte. La insurrección del retail ya comenzó. La pregunta es si Latinoamérica está lista para recibirla. Bienvenidos a una conversación que puede cambiar el destino de nuestros mercados de equities y derivados. Y para profundizar en el tema, nos acompañan Alejandro Faesi, director general de Casa de Bolsa Banorte y director general adjunto de Mercados y Ventas Institucionales de Grupo Financiero Banorte. Lucy Pamvukja, expert on Latam Capital Markets. Tim Janopoulos, former chairman and CEO de Trading Technologies. Tom Sosnoff, founder of Tasty Life. Y para conducir la mesa, Silvia Davi, Markets and Fintech Professional. Les damos la bienvenida al Risk Management and Trading Conference 2025.
Welcome, everyone. I'm Silvia Davi, and I'm honored to be back in beautiful Mexico City with this distinguished panel of leaders and what is a very important milestone year for Riskmathics for their 20th anniversary. So I think on behalf of the whole panel, we'd like to first start off by congratulating the entire Riskmathics team. So congratulations. Our discussion for today is a very interesting one. As you heard, the title, Growth in Equities and Derivatives, Why Latam Isn't Booming, and What Global Markets Can Teach Us. The goal of our discussion and this roundtable is to obtain from all of these leaders their unique perspective. So I'm going to turn it over to them so they could also formally introduce themselves and give just some initial thoughts. Perhaps we could start off with Alejandro, if you could formally introduce yourself.
Thank you. Yeah. Good afternoon to everybody. I'm Alejandro Faesi. I work in Banorte as head of markets. I studied actuarial science, so my background is on the mathematical side, let's say. Thank you.
Lucy. So I'm Lucy. Good afternoon, everybody. I've come from experience of 20 years working at the Brazilian Stock Exchange, what you nowadays know as B3. Then 5 years at the Santiago Stock Exchange in Chile and Stock Exchange and Clearinghouse. And then since 2020 in financial innovation in Brazil. Ultimately, this last month, I became the Capital Markets Executive Director of the National Association of Public Companies, the companies that are listed at the stock market in Brazil. Thank you.
Perfect. Tim.
I was the chairman and CEO of Trading Technologies and one of their co-founders. And so when I was at TT, right at the beginning, we were kind of going through the same thing that is going on right now in Latam, which is the pits were closing and we were at the infancy of the Fintech revolution. Everybody doubted that it would happen, but believe me, it did. And people would come kicking and screaming, but finally they jumped aboard. Right now, I work as a partner at a PE firm. I work at investment advisory, and I'm involved with a bunch of other fintechs, mentoring them, trying to see if they will be the next TT.
Great. And last but not least, Tom.
My name is Tom Sosnoff. I was a prop trader for almost 20 years on the floor of the SIBO. Then I founded and was the CEO of Thinkorswim. And then I founded and was the CEO of Tasty Trade. And now I am doing anything I want to do. It's fine.
Living the dream.
Yeah.
But I'm still working. I'm kind of a work junkie. So,
Love it.
And you have a coffee shop.
and I have a bad coffee shop.
Wonderful. Well, I'd like to set the premise and get started, and just for purposes of the discussion, set the stage for the panel. Despite the economic size, demographic depth of Mexico, and all the growth potential, Latin America's equity and derivative markets have stalled. They remain behind other emerging markets and regions. So we're joined by these industry figures here who are from the U.S., from Latin America, from Mexico, to provide their expertise in a couple of different areas, everywhere from capital markets, regulation, technology, market infrastructure. And I want to kick off by the very direct question as to why. Why hasn't it taken off? Why has Mexico in particular lagged other global markets despite its size? And so perhaps the best person to kick us off is Alejandro. Perhaps you could share from a structural standpoint your perspective on that direct question.
Yeah, I would be the first to start because I am Mexican. That's what you're saying. No? She's Brazilian, but we're friends from U.S. So, yeah, talking about Mexico, yeah, it's too much to say that Mexico is lagging or hasn't take off because it depends on which area you're looking at. No? In some areas, the development has been very good, and we're lagging in others. An area in particular that would be that it's lagging behind would be on equities, I think. The equity, the stock exchange, in general, the number of IPOs, the daily volume, etc. That could improve a lot, I think. So that is a topic we can discuss. Why is that booming? But for example, in derivatives, in interest rates in particular, the same metrics, the daily volume or the number of participants, the worldwide where they are coming, the big players, the hedge funds, etc. They are involved. So in that area, I would say we are doing pretty well and probably better off than some other emerging market economies, as South Africa or Latam. We are doing good in that sense. So in terms of the lagging one, that would be equities.
Right.
That is, I think, has to do with the pandemic. Probably hit us pretty hard. The fact that you can trade in Mexico, the U.S. markets and some other markets, European markets, that can be traded through the Mexican Stock Exchange, through the SIG. That has, so these magnificent 7 companies, we know Netflix, Apple, etc. You know, these big 7 companies, that it's tough to compete with them in terms of charming, of trading, of interest worldwide. Not Mexico with those companies, but in general worldwide with these companies. No? So in that sense, it's pretty natural that the market is drawn to trade more the U.S. because of those companies in particular, and then the AI revolution that it's happening right now, this big boom that it's happening pretty much in the U.S., no? So
that's very interesting. And I think, it's natural to move on to Lucy's perspective because she comes to us from Brazil. She's worked in Chile. She knows the region well. And there's some structural differences and different factors that have caused the Brazilian markets to boom. So if you could just provide your perspective, Lucy, on that topic and on some of what Alejandro was touching.
I mean, I would say that Brazil has developed more than the average of the other countries in the region, especially the stock market and derivatives too. And I will give a lot of kudos to the retail base of investors that was developed over the last 10, 15 years maybe. So nowadays we have 20 million retail investors trading. Not everybody trades every day, but this obviously brings a strong demand for the different alternatives that we have to trade in Brazil, understanding that when the macroeconomics interfere, it makes it very difficult for the stock market or any infrastructure or any product to be traded, because everybody will be risk averse and maybe will prefer trading or investing in fixed income, which is what is happening nowadays in Brazil. Looking at the numbers or the references that Alejandro was giving, like IPOs and everything else, Brazil has had a good story over the last maybe 20 years. And big part of that is because it created a stronger perception of corporate governance and ESG on the assets that we have in Brazil. So this generated the confidence that the market needed to trade, and therefore creating demand. More companies IPO'd and came to the market. Nevertheless, if you look at the numbers, at the same time we have a lot of IPOs, we have a lot of mergers, M&As, and maybe delisting. So you grow in one size and let's say have less companies on the other side. So overall, we are still 400 listed companies in Brazil. So challenges are, I think, tackle that. How can we make infrastructures, stock exchanges efficient to be the place where investors look for allocation, and issuers and other instrument providers come to offer their alternatives? How to make it successful? This is the challenge that you have.
Yeah, and it's all about that balance. And so, I want to shift the dialogue to Tom, in particular, giving your retail expertise, right? We're here in a market that wants to ignite growth in the equities and in the derivative markets. Touch upon how you'd go about doing that as someone that has done that in asset classes like options trading and other retail markets.
There is no question that in Mexico and other surrounding areas, there's an incredible demand for speculation and a lot of demand for what they consider asymmetric upside. So there's a huge demand for just things that are capital efficient that give you upside. And because of that, I think that there's a huge opportunity here. The downside is, the challenge is that there's a lot of big institutions that kind of dominate, and they're very restrictive, and there's very restrictive regulatory bodies. And so somebody's going to have to take some pain and to change, because structurally, the structure's broken, the foundation's there. And the foundation here is really good because it's really young too. So it's a young foundation with lots of speculative capital, with lots of demand. But as you go up the food chain, the products aren't here, the innovation's not here, the creativity's not here, the regulatory environment is way too tight, and it's not supportive of real financial innovation.
So, we touched on technology, and, Alejandro and Lucy, highlighted that it plays a role. And so I want to go to Tim, because a big part of why I think there's an opportunity with the newer generations is because they have been proactive in embracing emerging technologies or even AI. How could it play a role, Tim, in really helping ignite that growth here across these asset classes?
From a historical perspective, I think the fintechs that were around were focused on the fact that there was this large unbanking issue. So I think they focused a lot on financial inclusivity. And they also focused on bringing competition to the banks, but not in the trading area, bringing competition and just banking stuff. So as a result of that, and the fact that you don't have the electronic trading infrastructure, like the networks, the telcos, the mobile connectivity, because you didn't have any of that, it was hard to kind of breathe life into the electronic trading, and therefore, it limited their ability to trade derivatives and equities, especially at that time when this is going on. I will say, though, that what was interestingly kind of a spark, and this addresses a little bit what you said, Tom, was the passage of the Fintech Act, because it clarified a lot of things from a regulatory standpoint. And then secondly, believe it or not, I think COVID helped, because it forced, necessity is the mother of invention. It forced the various parties to work together to start the fintech process.
Absolutely. It's a process, and it really has to be integrated into the entire spectrum. And, Tom, you touched on how rigid the regulatory environment is here in Mexico, right? Are there any lessons learned from other regulatory developments that you could point to, and in what is needed here from a regulatory standpoint to really help drive that growth? And maybe Alejandro could also, give his perspective on the Mexican side.
The challenge is that if you look at the whole world and you think about it from an investment, and this is not taking into account decentralized markets or anything like that, just looking at kind of the structural listed marketplace, everything flows through the U.S. Basically, all the notional dollars flow to the U.S. And the reason for that is that we have a supportive regulatory environment to encourage, capital markets. It's different.
Right.
Encourage listed products, trading, everything else. The rest of the world has downplayed the importance of liquidity in building. Without liquidity, you can't raise capital. Without capital, you can't innovate. And so the problem is not Mexico. It's the same problem in Singapore. It's the same problem in Australia. It's the same problem in India. In order to attract capital, you have to have a regulatory environment that supports liquidity. You have to support money flowing in, to support giant pools of liquidity, so that you can so people will invest. Nobody's going to invest in an illiquid market. They will invest if there's the potential, to build something.
And Tom brings up great points. In particular, over the past couple of years, I've seen and read that Mexico is open to more opportunities and wants more investment. Alejandro, if you could give your perspective from a regulatory environment, are you seeing that those actions are being taken now? Is there that momentum to open up more doors for investment here in Mexico?
Yeah, I think particularly the regulatory oversight, or the tight regulatory environment could be released more on the institutional clients. So meaning not so much pension funds, that they have been open gradually in the past several years, like in the past 12 years or something. So they are pretty open now. I think that they are fine now. But for example, the mutual funds in Mexico, since there are no hedge funds here, they are not allowed, let's say, still in Mexico. So the mutual funds are really not into derivatives. No, they are not strictly forbidden to trade that, but under very specific circumstances, in a way that really the volume is too little. It's like if they were not trading at all. And I think that's an important end user, because one type of client could be a speculative capital. And talking pretty much about retail, I understand you were saying, Tom. So that's one type of user, let's say. But this other type, that it's not a speculative but a hedging type, and the size they have, it's pretty important for the relevant for the market. That could give, because if there is an end user at the end of the product, it's always easy to have in the middle somebody that is flipping around, buying or selling quickly. But at the end, it has to be some end users with a purpose of hedging and trying to optimize portfolios and all that. I think are there, but probably could be open a bit more on that side.
So, very, very interesting point. And I want to just read a statistic for the audience here. In 2024, the global listed derivatives market reached a record high of over 200 billion contracts traded, according to the Futures Industry Association. And in contrast, in Mexico, one of the world's most traded currencies and the key hub for regional hedging, still has a domestic market limited in depth and in participation. Why is that? And I'm opening it up to all of you. Any thoughts on that.
If I sorry,
Sure.
can repeat again? You were talking about FX, no? Pretty much.
Well, from the the overall contract
Overall,
listed derivative.
Because I was gonna say that in Mexico in general, in the CME at some point in
Mhm.
'95, when the CME started with the peso contract, that was a big boom around that. Eventually, it went from being in the future market in the CME to trade OTC. So in Mexico, the turnover of the cash market in the FX, it's huge, and compared to what trades in stocks in the exchanges, that it's pretty much nothing. It trades really a very small part of it. Most of it's traded, OTC, no, in the market, and that numbers are not that easy to get. If it's through an exchange, everybody has the numbers pretty clear. If it's OTC, then the numbers are a bit mixed. And in FX in particular, the peso is one of the currencies. I think after the real, probably in Brazil, is the second one. But China, if you, that trading
Yeah,
volume
some of them
more
trade,
in
yeah.
the turnover. Yeah.
What's your perspective on that, Tom?
It's a rigid regulatory environment here with restrictions on virtually everything. Opening margin accounts, selling short, trading futures. Like in the US, if you have the money, you can do whatever you want. Nobody cares. And that's closer to a free market. Here, everybody cares for some reason. I don't exactly know what it is, but everybody cares. So, and I think part of it's a conflict of interest with big institutions, a conflict of interest with regulators, a conflict of interest with banks. But it is absolutely ridiculous that and this is not just Mexico, there's a lot of different countries, but, it's hard to have a margin account. You have to have a significant amount of money. It's hard to trade a future. It's hard to be approved to trade options. I mean, it's virtually impossible. So until somebody champions regulatory changes, it's going to be tough.
There'll be limitations. Do you have anything to add, Lucy?
Yeah, I would say that maybe, and this is very, I feel myself a Latin American, so I can tell openly about this. We are very rigid on regulation. We are still on the model. We're still trying to copy. I'll mention just SMEs, small and medium cap. We're still stuck on same models that 20 years ago maybe London was doing.
Yes.
The world has changed. Everything has changed. The opening up of the conference when they were, the video was saying we need resilience and adaptation. And this is what we are missing. We are just
Innovation piece to it, right?
innovation and this adaptation. The world has changed. The SMEs are different nowadays. Why are we still thinking about models that 20 years ago, maybe in Europe, they worked, but are not working any longer? And I think this is
You're right.
an inspiration that we need to get from our neighbors here, from the US. Why aren't we enabling, try, test, and implementing things? Some things will go okay, and some will not, but it's okay. Let's open up the ideas and introduce new products.
Frankly, I think a lot of it is cultural. There's a lot of cultural differences. And I think it's a process when, education and technology, right? I mean, Tim, what is your perspective on the market infrastructure? How could technology help, with this process?
And I think, and I'll use the FX, I think that's a great example because the peso is so well regarded. I would say that what I understand, that the Mexican banking lobby is very powerful. I know that the Mexican banks now are very interested in trading FX, and it goes two ways too, because if we're talking about technology, not only can you do that locally, but now you are looking to have access to the international markets. I think it's too bad if the world is doing what they're doing without tough regulation, and the banks are having to sit on the sidelines. And I think that that's going to come to fruition at some point.
And, Alejandro and I were talking earlier about the reforms that are taking place currently, the securities market law. Is that creating a turning point here? Do you think, that'll have an impact?
Yep, and there are some coming on the repo side. that, as we know, it was pretty significant. I think when the central banks and in general the authorities tried to switch from LIBOR to find other reference rate, and the same happened in Mexico and I guess in all the countries, and the only reference that they could go was the overnight rate. So the SOFR has the O for overnight, right? So in the biggest market there is the US. You could imagine they would find several reference in 1 month, 3 months, 6 months, and at the end the market was overnight. The interbank market was overnight, and the reference has to be referred to that. And from there, they build up a 1 month or a 3 month OIS, a derivative based on the 1 day. That exactly happened in Mexico. The TIE was called here the old rate. The new reference is called TIE de Fondeo, TF. So Fondeo means overnight, pretty much. So at the end, it's exactly that, the overnight funding rate. So regarding that, the repo market, to the point, was that it's so big in Mexico and globally that anything that can be done to make it more efficient, more transparent, it's of a great help to the banks and to the system in general. The fact that the repos today has to settle and then the next day begin again and again settle and begin again. So this huge amount of money are transferred, the day and night, over and over, instead of just doing the difference. If you are going to invest almost the same amount as yesterday in a repo, you don't need the money to come and go. You can leave it there and just the small difference you want to take in or out. So you doing that, you make the system a lot more efficient. But it's not talking about equities or derivatives. So this was about the old repo, fixed income overnight market. But at the end, when I began to talk, it's what was the main driver in the US and in Mexico, not talking about reference rates.
And looking into the regulation, I was studying a little bit of the new regulation here in Mexico. I saw that there is this new hedge fund structure that was set up, which it surprised me that Mexico didn't have that ready. And it's okay, like opening up this alternative for institutional investors or for qualified investors, as it is called. And I have several experiences to tell about Brazil, products that were very complicated and very cumbersome and only for institutional or qualified investors in the beginning, that went up doing well and now are open for with more regulation, more controls, but are open for retail investors, like baskets of credits, for instance. So I see with good eyes, at least something is going on. The regulators are bringing some new ideas, implementing a simplified regime for listings of companies, for ofertas públicas for new assets. So this is very positive. Let's see how it will work. I'm not sure about it's
right.
Yeah,
It's a
hotel.
It's a process, and frankly, it drives us into our next theme of financial education, right? I think the markets are starting to open up in newer alternatives, and I think the key fundamental role of education is something I want to turn to Tom about, because he's really been a driver of educating retail investors in different trading strategies, and developing human capital is, I know, a tactic that you've used for investors that were your average, mom and pops in that were into your qualified, sophisticated investors. So take us through the strategies and how important financial education is to drive that growth of retail participation.
You're kind of going to hate my answer, but I'm not a huge fan of financial education and financial literacy training, because I believe that it's essentially much more of a know-how game, and it's much more of a game of participation. I think that the future of finance is participatory, and the future of finance is learning the mechanics of, because the technology today is so good that financial education, used to be about, before there were mechanics, before there was front end technology, from like the stuff that Tim built to the stuff that I built, the learning curve is really short. And what people really need to do is learn about products, learn about markets, learn about decision making, learn about just processing things, learn about the probability of different outcomes. And so I don't focus so much on the strategies because people gravitate towards strategies. I think we really just have to focus on engagement. And the key to engagement is just opening it up so there's not a fundamental discussion on one topic. Like nobody cares about, I don't care about the Japanese yen. I don't care about the peso. I don't care about a specific stock. I care about all the markets, and I care about engaging people so they have opportunity to go to any marketplace they want to. The concept of trade anything you want, participate in any market because the technology exists.
And that's, your philosophy essentially to active participation, right? Just to open it up. And that's a good segue. I mean, Tim, we talk about technology a lot. Can emerging technologies like AI really help, engage new generations, new markets? How could that really help boost the participation?
And I think I won't even try to surpass what Tom said yesterday. If you were here yesterday, what he said and where AI is going in a beneficial way is amazing. I just wanted to agree on the education. What we would do at TT is we wouldn't go there teach. We wouldn't have any of our trader people teach. We would just dump the software off, teach them, give them a demo, teach them the software, and then let them get on a simulated market and just play around. And through trial and error, you make it happen. But yeah, in terms of the AI, the last thing I'll say there is, what I love the most are proactive alerts, proactive notifications, and that could be because of a risk issue, a surveillance issue, or a trading opportunity. And I think all of those could use AI because at the end of the day, I'm simple. AI is pattern detection. So, and I think that's the great opportunity.
That's well said. I want to, conclude by really focusing on where we are from that retail and participation regionally and globally, right? Are we seeing a path, of continued growth, or are there other factors? Is the geopolitical environment a factor, or is technology a factor? And so maybe, we could go around and maybe start with you, Tom. Just your final thoughts on, are we experiencing a new era of retail growth? What are some of the markets that you think are poised for the most growth, and the tactics in order to continue encouraging that growth?
Anytime you are living through a technological revolution like we are now, whether it's AI or anything else, it'll be quantum computing soon. Anytime you have that kind of ecosystem, you're going to see explosive growth in markets. There's no turning back. There is nothing but, smooth sailing ahead. The reason for that is because people will gravitate towards opportunity if the markets are efficient. And the more players, the more liquidity, the more efficiency. We're kind of in our infancy. So one of the cool things about everybody being here now is that, you're the next generation of figuring out how to blow this thing open and how to give access to all the markets, to all the people, to all the strategies, and how to continue building really, really good front-end technology. And then by doing that, when you build really good front-end technology, the exchanges take notice, and then they have to build really good back-end technology. And then the regulators take notice, and they finally wake up and they say, okay, you can do this. So the key driver, I think, is the retail investor. It's not the institutional trader because we don't care. It's the retail investor, and the retail investor drives the technology decisions, and technology decisions drive what happens at the exchanges.
Well said. It's all part of a cycle. Lucy?
Oh, yeah. I can tell, at least in Brazil, we are seeing definitely this ramp up of a retail investor, but I will give credit to the technology that was implemented and alternatives that made available for retail investors to really jump in and trade any product that they want, because now the exchange in Brazil is the let's say it's not just stock or derivative exchange. They have fixed income, credit instruments, and several other things. So it's really giving access through good technology and reliable technology to access people in Brazil, in all corners of Brazil. But one important aspect that I will add to Tim and Tom about financial education, that maybe it's not the reality in the US, but it is in countries like ours, is that financial education is the first step that maybe this young generation or people that are just starting to work need to create this understanding and the critical thinking about, I need to save money, how much of my money I can spend on whatever things that I buy, and how much money I have have to save to invest and think about my longevity, my pension, or things like that. So this is still, I think, a challenge that we have in Latin American countries because of the poverty and everything. So continue helping financial education in the sense of creating this critical thinking about the need of saving money to invest and think about over years and longevity.
And more specialized training in countries like this one. And that's why risk mathix came about, right?
Exactly.
Yeah, and what I'd say, too, about what you just said is I was surprised to hear that the average age in Mexico is just a little bit over 30. And as a result, a lot of the push on the electronic trading is you're going to have people that are way more interested than old people like me in technology and learning it and making that your livelihood. Number one. Number two, on your retail point, I was, I'm sure you were too, Tom. I was shocked to hear that Kraken Exchange paid as much as they did for Ninja Trader, $1.5 billion. And what are they doing with that? It's just another example of, but in this case, what they want to do is they want the retail for crypto, $1.5 billion for that company. And you can't go to one conference in the U.S. where you have all the exchange heads talking up there on the stage where they don't say the future is retail.
Absolutely. And, because of we started the dialogue talking about Mexico and the impediment from a regulatory standpoint, just mixing that with technology, like smart regulation, and just, some final thoughts on how the technology could continue to help the regulators to open it up in this growth pattern.
To me, I'll say what I said yesterday. I think it starts first and foremost between the fintechs and the banks, and they have I think you have Santander that's I think they bought fintech. I think BBVA they did too, and that both of them have interesting fintech programs. But I think overall you got to get out of that old boy network and be way more receptive to collaboration with the fintechs. They're not here to eat your lunch. They're here to play the role that they play.
It's all about innovating the infrastructure. Any final thoughts on that point, Tom?
Yeah, I'm going to tell you a really quick story. So after this conference, I'm on my way to Guadalajara because there's a school there, Pan American University, that we sponsored a group of young kids, graduate students and undergrads, and we gave them money to trade with. And that was about a year ago. And they use our platform. They trade in U.S. markets. They trade all derivatives, all options, futures, no stocks. And they've tripled their money in a year with a really good curriculum, with a really good professors. Awesome. And they are way ahead of any university that I speak at in the U.S., like literally way ahead. So the opportunity and the demand here at a university level, it's there. It's just a question of, you have to harness it. You have to realize it.
Yeah, absolutely. The level of sophistication and that generation is very encouraging. And that's why I want to just end with Alejandro from the Mexican perspective. Are you encouraged by everything you're hearing and the boom that hopefully it awaits the Mexican retail participation for both equities and derivatives?
Yeah, during the pandemic, it was pretty an awakening, you could say.
Absolutely.
Really young boys, probably 16, 18, 20, very young, that didn't invest before in the stock market, started doing that. This meme stock fever that happened there. It was an interesting sociological phenomena around that bring a boom to a lot of different companies, as Robinhood, for example. And but then it burst, at the end, because you can buy whatever, some special meme stock. It goes for a while with a trend, but then at the end there's nothing. It's just air, and it burst. So that compared to the actual education of the system, and one thing is to play in the market, to speculate in the market, and the other one is to invest in the market. For me, one is look in the short term, one is focused on the short term, the other one is focused on the long term. So to be in a longer perspective successful, you need to have the education. It's not enough whatever TikTok told you to buy.
Exactly.
That can last for 2 weeks. That's the trend. But in order to have that for 2 years, you need to have a deeper foundations and more knowledge about. I think Mexico is growing in that direction. Events like this one, and in general, the college, the high schools even, there are programs that didn't exist before.
That are now.
And the banks as Banorte and Santander, BBV, they have programs focused on a younger age than before, especially for that kind of generation that is clearly with a new focus that it was. So you need to put up to speed to that kind of generation.
And that's the great way to end this. From a banking perspective, it's great to see they're receptive, they're open to new innovation, and to really driving these programs for the next generation to continue to grow. So I'd like to thank our distinguished panel for this fascinating discussion, and hopefully we could all be back next year to see where we are, right? So thank you again, everyone, for your participation.
Thank you.
Thank you.